Hi everyone, Happy New Year, and I hope you all had a great Christmas. This month we'll be discussing the 2024 year's close, as we've seen some significant developments in global markets and a few clues about what we can expect in 2025. In this update, I'll recap the US Federal Reserve's recent moves, how the markets reacted in December, and what's on the horizon for 2025. We'll discuss potential tax cuts in the US and their impact, as well as the evolving interest rate landscape here in Australia. So let's get started. This video is for my clients, friends and family and is general in nature. Should you want personalised advice, please do not hesitate to contact me. So the Fed rate cuts and market reaction in December saw the US Federal Reserve continue its rate cutting strategy by reducing the interest rate down a further 0.25%. This would normally signal an increase in US investments as businesses have less interest to pay for their debt-supported projects, and that in turn adds to profits. However, as the Fed Chair, Jerome Powell, signaled that there are likely to only be 2 more cuts next year in order to control inflation but still support economic growth, the market reacted poorly to this news, and we have seen a significant drop for December, with the S&P 500 dropping 2.5%. However, this could be a good sign looking forward into the new calendar year, as markets are very much forward-looking. Jeremy Powell has indicated he's going to slow the rate cuts, and should he do one earlier than expected next year, or more than expected, we should see a rally in the market. The only time we would not see a rally in the market around Fed's decisions is if he does less than 2 rate cuts. Overall, the S&P 500 dropped 2.54% and the Australian ASX dropped almost 4%, wiping out many of the gains from the previous months. This really highlights investors' caution as they awaited clarity on 2025 economic policies. Preview of 2025 Trump's proposed tax cuts looking ahead for 2025. One of the major economic proposals on the table is incoming President Donald Trump's plan to significantly tax cuts for corporations that utilize US manufacturing, aimed at supporting small to medium-sized businesses. These proposed cuts could provide a great return for small cap stocks, which often face higher effective tax rates, rather than large corporations who already benefit from existing loopholes. Investors will be keeping a close eye on how these policies might influence market sectors differently, particularly small cap stocks versus large cap blue chips. Now let's look at the interest rates in Australia. The Reserve Bank of Australia has delayed any changes to the cash rate in 2024, and now the first rate cut is looking likely it could be pushed out even further. Therefore, the big banks indicating they will look at cutting interest rates. CBA and Westpac predict 4 interest rate cuts, bringing the RBA cash rate as low as 3.35% by Christmas 2025. ANZ only predicting 2 interest rate cuts, while NAB believe interest rates will be held until May, and then we will see 5 cuts very aggressively. Although this has been bolstered as inflation rates are expected to have decreased again for the month of November, and therefore this will boost renewed hope that the RBA will drop interest rates. Currently, you can get as low as 5.69% owner-occupied fixed rates for 2 years, or variable for 5.99%. The first rate cut, initially expected in early 2025, now looks like to occur in May or even later. This reflects ongoing caution as inflation trends downward but remains volatile. This prolonged period of higher interest rate continues to challenge households and businesses. However, the outlook for rate cuts later in this year brings some hope for easing financial pressures, particularly for mortgage holders and small businesses. As we begin 2025, it's a great time to reflect on how the year's economic trends have shaped your financial goals and plans for the future. If you'd like to discuss how these developments might impact your personal situation, feel free to reach out. Thanks for tuning into this month's market update and for following along throughout the year. Wish you a happy and great 2025. Your financial well-being is our #1 priority.